Having apparently swerved the worst effects of the UK's autumn budget in November, shares in Lloyds Banking Group appear to be heading for a hugely positive end to the year. Year to date, the retail bank stock has climbed more than 77% in 25, positioning it for its best annual gain since 2012, when it climbed nearly 85%. For UK-focused stock investors, this is a clear success. All eyes are now on when Lloyds shares will surpass that all-important £1 mark. The last time Lloyds stock price went through the £1 mark, it was October 2008, and shares were falling as the global financial crisis unfolded. Today, however, there is a sting in the tail for prospective buyers of the company's recovery. Lloyds is overvalued. Lloyds Banking Group has several factors to thank for its current share price momentum, however. For one, higher inflation and higher interest rates mean its net interest margins, that is to say, the difference between the interest paid on assets versus the interest rate paid on liabilities, have been much stronger. Even though interest rates are now set to fall in 2026, analysts view the company as a low-risk, pure-play retail banking offering with a strong deposit base and clear barriers to competition that prevent challengers taking up space in the market. At its most recent results for the 9 months to September 2025, Lloyds posted after-tax profits of £3.3 billion. Admittedly, this was slightly down from the £3.8 billion the year before. That's thanks to a car loan finance scandal the company will now compensate customers for via an £800 million war chest for redress. Investors appear to have shrugged off this news. However, on October the 23rd, the day of the results, shares still rose around 0.5%. So is Lloyds a buy right now? Well, the good news is that this retail banking giant is a solid British business playing its role in the resurgence of good old-fashioned UK dividend-paying value stocks. The bad news is that Morningstar equity analyst Nicholas Kammer says the company's shares are too expensive to be attractive. He assigns the company a fair value estimate of 78p per share. Today, Lloyds trades at around 96p, making its stock overvalued, and that milestone £1 mark not quite as special as you might think. For Morningstar, I'm Ollie Smith.